This is Andrew Stotz of Stotz Investment Research to look at Korea, which at this point seems to be the most attractive market in Asia. There's four parts to what we're going to look at. First, let's start with GDP. If we look into GDP, the first thing we can see is overall it's relatively slow for Korea at about 2.9% GDP growth over the last 4 quarters. The driver has been private consumption, which is basically all of that. The laggard has been the slowdown in exports, which has been impacting negatively by about 1% on GDP. Investments now only contribute about 0.24 compared to 1.3 as of second quarter. So let's now look at the country and see what's happening right now. Right now we have an acting president. There's about 51 million people in the country. The GDP is about 1.4 trillion US dollars, and GDP per capita is 27,000 US dollars. So again, very much a developed market income level. The market capitalization of the stock market is 1.3 trillion US dollars, and volume's about $6 billion a day. Now, it's the cheapest in Asia. It's trading below book value. Now, that's in line with what I've written about before, which I called the Korea discount. The PE at 9.7 is lowest in Asia as well. So that discount is alive and well. And good 2017 earnings growth expected by analysts at about, for the PE that you're getting about 13% earnings growth. That's expected. Now, analysts in Korea, I've shown in the past research, are particularly optimistic, so that could come down. Now, let's look at the Stotz 4 elements, where we look at the country ranked relative to Asia, and the overall ranking is very high. We can see valuation and momentum are the strong factors for Korea. When I talk about momentum, I'm talking about both price and fundamentals, let's say, and earnings. And the weakness is risk right now. So it's the best in Asia. The ROE is weak at about 10%, so fundamentals are not what's good there. But it trades below book value at 17 for 2017, and also on PE as well. There's a great price and earnings momentum, which may be the thing worth riding right now. Risk is relatively high because of a beta in particular. I look at risk on balance sheet, income statement, and price risk. So let's move on to the overall market and get a picture of what's going on there. The first thing is that the top 3 sectors are infotech, which is 31% of the market. That's massive. Probably the biggest in Asia. Consumer discretionary is 14%, and industrials are 13%. So let's look at the movers. The best sector in stock, energy, was up 5%, and S-Oil Corp was up 13%. So a rise in oil prices benefited there. But you can see a lot more on the downside over the past 3 months. The worst stock and sector was healthcare sector, down 22%, and Hamni Science, which was down 55%. All right, so there's Korea. To get access to additional research and articles, just join our free newsletter at becomeabetterinvestor.net/join. I'll see you there.